Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore Fintech Festival, and joining me for this segment we have Jason Thompson. He's the CEO of Partior. We're going to discuss the changing landscape of liquidity and how distributed ledger technology is already changing the face of money movement around the world. Jason, it's great to see you. Welcome to Trade Talks, and let's talk about these global trends that you're seeing in terms of how liquidity is changing.
Yeah, I think first and foremost, we believe that liquidity will still predominantly be commercial bank. However, we're seeing that move from, pre-funding and a non-digital to real time, and that's allowing us to change the way that money moves around the world. Of course, central bank digital currencies are evolving, but still slowly so. So we see that complementing the commercial bank money, but I guess the big question is if we'll see liquidity as a service and other commercial models enter. We're not seeing anything that would suggest that's going to happen quickly, but to us we're quite agnostic. Whether it's central bank money or commercial, we can operate as a fully digitalized worldwide ledger.
Tell me about the G20 tech sprint win.
Yeah, I think we won the G20 Tech Sprint for CBDC, the challenge, but the way the business was set up and ideated, we were always looking to work across M0 central bank currency as well as the commercial bank currency. So we looked at a federated approach because we believe policy will still be very different globally. And so that way we could operate on a global model, different policies, and allow both central bank and commercial bank money to interoperate. So interoperability, open, all the things you hear about Web3.
Yeah, well, let's talk about how the money movement, how it's materializing, or perhaps the future of it leveraging DLT.
Yeah, so let's take a complex transaction. You have three banks through a settlement bank, maybe you have FX in there, and you have a tokenized asset. Today, they're all a disjointed, disparate set of systems and messaging. So that means that increased risk, increased liquidity requirements, increased costs, lower cadence. With new types of technology that's been around for a while now, just not developed for this, you can do that simultaneously and low cost. So the estimation is just in payments, the industry can reduce costs by around 100 billion a year. So this is a huge amount of legacy systems that are just not creating the right efficiency. Now, why do we want to do that? It's not just cost. If you think about the benefit to the end customer of the bank, this starts to mean that you can move assets, you can move money, and you can do this simultaneously, and you can do it atomically, so right in the moment.
All right, appreciate the insight, Jason. Thanks for joining us on Trade Talks, and thanks for joining me throughout the Singapore Fintech Festival. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.